Hi, I'll just give you a simple strategy. This is for only options. So what I'll do is, and options for not short term in the sense not intraday, it will be carryover trades. So I'm just switching on the Odin. So let me just pick some calls, like let's say we'll take Reliance. You can just see that Reliance, we had this call that was on 1st of April. The buy call is very good. It's continuing its trend even now. So roughly, in case if you would have traded in futures, this would have been your profit. That's for carryover trades. And in case if someone is unable to do intraday, then they can always do carryover trades like this. So that's 66 into 250. So that's roughly around 16,500 rupees on each lot. Now what will happen in case if I take the same script and I trade it on options? Now what you'll have to do is you'll have to do a small end of the day analysis once you get a call. So what I'm doing here, I'm just taking since it's a buy call in Reliance, so you'll buy and call option. So you'll buy and call option at a strike price which is somewhere around 840. You can see that the call was, this buy call got generated on 1st of April, and the price was around let's say 842 or something like that. You can see the price here on the right side, right of the panel. So 842. Now what I do is, when I am trading in options, when I get a buy call in my futures tree, my TradingTree chart, I'll buy and call option. Okay, I will just add Reliance here, and my expiry will be the current month expiry only, 30th April. So I am taking a strike price of 840. 840 is the price at which I got the buy call. So I am buying and call option. So I'm just adding this here. This is to just give you an indication that what will be the current price of Reliance, that is in options, that is 68 rupees. So 68 rupees is your current running price. Now I'll just tell you at what price we could have bought this. I mean previously on the 1st of April. So I'm just showing you this particular historical prices. So you just select stock options. I have some problem with this. So these are prices which you can get it directly from your NSE portal. So stock options, and I choose Reliance. And the present month, the present year. So expiry I'll choose 30th 4, 34, that is this month's expiry. And I am choosing a call option. C is our call option. My strike price is 840. So I bought this at 840 strike on 1st of April. So let me just take 15 days history. I'll show you what is the price at which we have bought this. So at the end of 1st April, that is, we bought this at a price of 20 rupees. So this was your last traded price for Reliance on 1st of April. You can see that in the chart. We bought this on nearly the end of the day. We got this call at around 3 o'clock. So we bought this call option with a strike price of 840 in Reliance. Now the price is 905. Let's not worry about that. Let's talk about the option price. So we bought it at 20 rupees 25 paise, and you can see the current price here. The current price is 68 rupees. So volumes will naturally be good in Reliance. So what will be your profit here? So that is roughly around 68 minus 25 rupees. So that's around 43 rupees is your profit multiplied by the lot size. So roughly around 10,000 rupees. So 10,000 rupees is your profit, 10,750. Let me just tell you what is your investment in this. That is roughly around 25 into 250. So for 6,250 is your investment. That is the premium what you have paid at 25 rupees. So you have made around 10,000 rupees, 10,750, whatever it is. So that is how you can trade in options. That is your carryover trades. Okay, we can still wait on this because you know that Reliance is on an uptrend. So I got some falls. So you can make it R1 at least. So you can still wait on this particular call. So that is how we can trade in options. Now let me just take another example. Let's say SBI. So SBI, we got this buy call again on 1st at around 3 o'clock at the same time like Reliance. The strike was 273. You can see that this is the price, 273. We had this buy call. So let's check what was the price of SBI on 1st of April. So that is the price at which you would have bought it. So I'll just include the strike for SBI. Again, since it's a buy call, it's a call option. 273. So when you are making it a call option, you'll always tend to go higher. So I have just put it as 275 is my strike price. So the current running price for SBI is 13 rupees 65 paise. That is the option price, current option price. Now what is the price at which we have bought it? So let's change this Reliance to SBI. The rest of the things remain the same. I changed the strike price to 275 And then let's click on the get data. You can see that on April 1st, almost the closing time, my price was around 9 rupees, 9 rupees 5 paise. So 9 rupees I bought this call option. So 9 into 1250 is your lot. Sorry. So your investment was something like 11,250 rupees. And you know your loss also. Then this will be a maximum loss. That is, if in case if the trade reverses, that is your premium. But you know that the current price is around 13 rupees 65 paise. So you bought it at 9 and now it is at 13.65. So that's roughly around 4.6 into 1250. So that will be a profit. So 5,750 is your profit on an investment of when you bought it at 9,000. At 9 rupees, 5 paise. Like this, you can trade on the options, the carryover options. Trading intraday will be a bit difficult for you because you'll have to get the right strike prices and volumes and all this. But if you choose scripts, like you'll also get this highly traded scripts in options. You can just go to the option chain. You can see that these are the highly traded scripts: Nifty, Bank Nifty, Bogart Pharma, or else you can choose stock options also. So IDFC, Reliance, Ashok, Infi, SBI, Axis, HDIL, these are the highly traded volumes in options. So you just in the morning just pick this particular calls and then place your trades, either a call option or a put option. Put option is for calls where you get a sell call in your chart. In case if you get a sell call in your chart, then you buy and put option. Maybe I'll just try and find one. You can even check this Sun Pharma. So we got this call yesterday. The strike was around let's say 1120. So you'll buy and put option here because it's a sell call. Now let me just go to the, so I'll just add Sun Pharma. So here I am going to take the so 1120 is my strike, but here I'll take the put option. So you can see that the put option is 39 rupees 30 paise here. And the other one what you are seeing is the call option. I did that last week. So this is a put option. The current running price is 39.30. And let me just show you the historical price for this. I mean the yesterday's price. So I am buying a put option here. 1120 is my strike. So I'll just take the data for last 7 days. So the call what we had was yesterday's. Yesterday we had that sell call. I'll just show you once more. So this was my sell price. 1120 is my strike. and 11.14 is the current price. So yesterday at around, so this was the price, LTP, that was the LTP, but you can see that we got this call in the morning, sometime in the morning, that is at market open, so at 10 o'clock. Now at 10 o'clock, what was the price? So somewhere near my open price, that is around 18 rupees was my price, 18 or 19 rupees, whatever was the price. Now the same price, what I bought, 18 rupees has gone up to 39 rupees. So that has actually doubled. So here in a single day, your option price has doubled, and you are buying and put options since it's a sell call. So it's very simple. So this is how you can trade on options. So roughly your profit will be around, let's say, 19 rupees into 250. So 4,750 is the profit what you have made. But what was your investment? Let's say 20 rupees, 20 into 250. So that's almost double the profit what you have made. And but the call is still continuing. It's still a sell call in Sun Pharma. You can see that there is a probability that it can go up to its S1 level. That is the first support at which we have 1104 is the first support for the Sun Pharma. So we can still wait on this. You can actually see the high was around 41 rupees. So plus 2 rupees, another 500 rupees is your profit in case you have exited that call. So this is how we can trade on options. You can pick some selected options, you just place the calls and then just forget it. You will definitely be able to make sizable amount of money, but you know your losses when you place the trade. The loss will be your premium, whatever you are investing. But in some cases like what I showed you just right now, Sun Pharma within a day it has doubled. So there are chances, like I was looking at one particular call in HDIL. It was almost 8 times the profit, 800% profit what we got. So in case if you have any questions, you can, this is purely again options for people who just don't have time and who just want to invest and then make some profit out of each trade. They can enter into that. So REC has done its final target. RCOM, we had a sell call and then now it is a buy call. The package in the sense, which package you are talking about, Sanjay? just message me your, just can you just type your email ID? Okay, I'll just mail you this. I'll mail you the information. You can check it after some time. So let's, let's just check. Since the markets are sort of flat, let's just check Jubilant Food. Jubilant Food, we had this call on again on 1st of April. So the strike was something like 1520. 1520 is the strike. Always you'll have to look at a strike price where you get volumes, and otherwise you'll end up in a swoop. So Jubilant Food, my strike is 1520. On 1st of April, I had this call. Let me just check what is the current running price. So since it's a buy call, we'll buy and call option. So 1520, we don't have the strike. So since it's a call option, we'll go for 1550. So that's a call option. So currently the price is 109.75. You can see it here. So Jubilant Food. Now let me just get you the historical data on the day when we had this call. So I'll just take Jubilant Food. So it's a call option, CE. So 1550 is the strike. So let me just take the last 15 days data. I had this call on 1st of April again. So the 1st of April, the LTP, let me just take the end of the day. But otherwise, we had this call at somewhere around 1:30 in the afternoon. 1:30 in the afternoon. So I'm just, for simplification, I'm just taking the end of the day price. That is 29 rupees 80 paise was your price at which you bought this call option with a strike of 1550. Let's say 30 rupees. That 30 rupees has changed into 109 now. So that's tripled. So you can just calculate your profit into, sorry. So 109 into 250. That's your lot size. So that is around 27,000 rupees profit for an investment of 3,750. So for that is 7,500 rupees is your investment, for which you have made a profit of around 27,000 rupees, more than 3 times your investment. So that is Jubilant Food. Now in case if you ask me what will be its position, you can exit. You can exit at this point also. You have made sizable amount of profit. And the charts what you are seeing on 30 minutes more. So I am not putting it in 10 minutes. 10 minutes is for intraday. Now I have put it in 30 minutes, and then I am asking you to do a trade of options. So you know your maximum loss. Your maximum loss here is your premium. Your maximum loss on this particular trade would have been 7,500 rupees only. But in case if you check your profits, it's more than 3 times. That's more than 300% returns. almost most of the calls which we had on 1st of April still continue. Maybe some have some went flat and then went up also, but there are some very good trades also. You can see PTC is absolutely flat. So whenever you get calls like this, it's better to avoid these calls. So let's check RCOM. Since it's a current running trade. So we got this call on 4th of April. So your strike is 62 rupees. You can see 61.95. So obviously it should be 62 rupees will be your strike. Now let me just add RCOM here. Since it's a buy call, so we'll be buying a call option. So I'm taking 62.50 is the strike. So I'm taking a call option since I have a buy call there. So my current price is 5 rupees 10 paise, the current running price, and you can just see the volumes. So when the particular script is very active, your volumes will be very good. Now instead of trading in 1 lot or 2 lots, you can even trade in 10 lots also. So the strike is 62.50. I'll just show you what will be your investment here. So again, this is a call option, 62.50. That is your strike. So we are getting the data for that. So we got this call on 7th. I'll show you once more. So we got this call on 7th at around 12 o'clock. So 12 o'clock was the price. So at this point you have made this almost your exit price is what you can take. That is the end of the day price. So my last traded price on that particular day was on 7th of April, it was 2 rupees 25 paise. So 2 rupees 25 paise into 2000 is your lot size. That's around 4,500 rupees is your investment. Now 4,500 rupees is my investment, and what is my profit now? So it's around 5.2. So 5.2 into 2000. So 10,000 rupees, 10,400 rupees. So you have actually doubled your investment here. That is on a single lot. So when you are looking at the chart, it seems it's already made its R3 levels. So when you have made double or triple the money, I think there is no, you should not be wasting your time on that particular script. Make your money, book your profit and jump into the next trade, whichever you get. So you have liquid cash in your account. So you can just keep on trading like this. You don't have to actually even do intraday also, in case if you find it very difficult. You can trade in options, and you can trade safely also, because you are prepared for your losses. Initially when you place the trade, your loss will be your investment, that is your premium. And try to do these trades mostly during the month, the contract opening, and try to avoid options always during the close of the contract. That is when the time decay comes into the picture. So if you have bought an option at a premium of 100 rupees, it can go into zero also on that particular last 1 week. So it's always better in case if you can trade during the contract opening, then you'll be in safer hands. Otherwise, you can even hedge it also. There are various hedging strategies what we have. We can even do that also. I would like to show one particular trade, Century Textiles. This I have been following in from past couple of weeks. I'll just open the chart for you. It will be an amazing result. It will be even surprising also for many. So Century Textiles, the current price is 752. I'm just taking the backfill. Let me just open the chart. I have a chart open in the other system. So this is Century Textiles. So we got this buy call long time back. So let me just put it in 60 minutes. So I got this buy call at around 580. 580 was my strike price. Now this has gone up to 752. So I'll take my entry because you will place the order here. Your order will get executed on 27th or let's say 30th. So 30th, my strike is 580. Now my current price is 753. It's a call option. So 580 I am taking a strike. So let me just give you here. Let me just show you at what price we bought it. So 580 is a strike. So I'm just taking the data for 30 days. Let me just show you what is the current price also. So Century Textiles, you can see that so it's around 140 rupees is my current price. So if you ask me what is my investment, at what price I would have bought it, I would have bought it at around 58 rupees or 34 rupees. That is, you can check the dates here. So that's on 27th. 27th I would have bought this price. So 27th, let me take the LTP, the last traded price for Century Textiles. So 27th, my last traded price was 58 rupees 50 paise. So you can see the contracts on that particular 3 days. It's the maximum on those particular 3 days. So 58 rupees I have bought it. Now my current price is 140. So that's 3 times. So 3 times your investment. 300% is your returns. So 58 into 500, let's say. So around 29,000 rupees is my investment on each lot, and I have made a profit of 140 into 500, 70,000 rupees. So that's my almost triple the investment. So that's a very good profit. You can even exit today also. And if you ask me what happened in futures, The futures, it's around 180 rupees. 180 into 500 is your profit. So like this, we do have trades on idea. We have trades on Havels also. There's some very good trades what we have. So coming back to our intraday, so that's RCom, REC, Bank of India, SBI, Adani Enterprises. So you can just see that RCom even made 6 rupees 30 paise. So in case if you have any doubts, you can just type it in the chat box. The next time we will talk about some hedging strategies. Hedging in the sense hedging on a single script, where your losses will be negligible. Your losses will be nil almost, but your profits also will be very less. So that we have tried to automate it. We'll have a look at that particular application sometime in the next week. So SBI has done its final target. Let's check the next target. The next target should be 286. That's your resistance, the first resistance. So now we have buy call in Bharti. It actually had a sell call with its intermediate targets. The same thing with Tata Steel. We had a sell call initially, made its intermediate targets. Now we have a second call on that. PNB we had a sell call. It was a gap on open, so it was a no call for us. But we have a buy call now. Let's check the buy call. So the first target should be your 163 level, that is the R1 level. Heavens was a sell call what we had on 30th of last month, that is March. The strike was 300. It's a put option. So 300 strike put option. Let me check what is the current running price. The current running price is 20 rupees. We had this call on 31st. So select the put option. 300 is your strike. So I'll just take last 15 days data. So at the end of the day also it was around 10 rupees 25 paise was my premium for Havels. Now the current price is around 20 rupees. So you have doubled your investment here. So that is you have invested around 10,000 odd, 10,250, and you have made a profit of 20,000 rupees here. In the volumes here, that was yesterday's close. Yesterday's close was 20 rupees. We don't have any volumes here. So it's 2 hours from the market open, and these are some of the calls that we have. So I think I'll just wind up this meeting, and I think I should take this. So in case if you have any queries, anyway, I'll be posting the video. In case if you have any doubts in the options, what we option strategy, what we had in the few minutes back, you can just cross check it again. Otherwise, I'll just post the video again. You can just have a look at it. Thanks for coming. Bye.